This year's recession was unlike any we've seen before in the U.S. Not only was the cause unprecedented, but so too was the response from the government and the Fed. But that could lead to long-lasting positive changes for the economy. As this headline from the Wall Street Journal says, the economy next year could be a lot better than you think. Joining me now is the author of this piece, Greg Ip, the Journal's chief economics commentator. Greg, it's great to have you. And so you're not talking about this, stimulus bill, all the sort of short-term factors we're usually going over here. What are some of the deeper changes that you think are positives?
Well, Kelly, I think people almost right from the start have never fully grasped what is special about the recession we had. It wasn't a classic recession brought on by higher interest rates or tighter financial conditions. It was brought on by a natural disaster. And we know that once the disaster is over, supply, the ability to produce goods and services, springs back to where it was before. This has been a very long and deep and broad-based disaster, of course, but the principle still applies. We had a V-shaped rebound when lockdown first ended, but we've never fully lifted all the restrictions. That will happen sometime in the next 3 or 4 months, God willing, assuming the vaccines remain effective and everybody gets vaccinated. And then you're just going to see an enormous rebound in activity as people go out who have not been able to spend, and they go out to spend. And the other key difference here is the policy response, Kelly, has just been like completely off the charts. When you include the stimulus bill that the president signed yesterday, there's now been more as a share of GDP stimulus in less than 2 years than we had over 5 years during the Great Recession. All that money storing up, a ton of it to be spent in a matter of months. So I think that what you're looking ahead is an outlook that is in many ways much more positive than I think most people have taken on board.
Yeah, and also, Greg, I know you've written, and this is kind of separate, but happening at the same time, about why the pandemic has propelled businesses into the future. All of these different technological changes. I mean, the NASDAQ tells you that story, the massive new customers that we have for all sorts of technology that has been brought forward into 1 year that would normally take, 4, 5, 6, 10 years to play out. But I want to ask you, because it's not getting a lot of play today, but I think you bring up something really interesting about just how big the government response has been to the pandemic, especially with this latest bill. It's something that Jim Paulson was talking about a couple of months ago, that, we've had a much bigger response from the Fed and on the fiscal side. Is it too big? In other words, all of the targeted help is one thing, but are the dollars that we're putting into the economy, is the balance sheet expansion that the Fed's doing, is it more than necessary? Is it going to cause problems here as things normalize?
Well, I think another feature of this recession, which is different from any of the others that you or I have lived through, is that we went into it with monetary policy with very little ammunition, very short-term interest rates quite low. And therefore, the Fed basically used up all its ammo quickly. And that basically meant that you only had fiscal policy left. And so while the fiscal response has been much larger, and I think that's what Jim Paulson is talking about, the amount of debt we've taken on, it was in some sense, number one, necessary because we didn't have the usual firefighters at the Federal Reserve with as much equipment and ammunition. But number two, the very fact that interest rates are at zero means we can take on more debt at a lower price. So when I look at the aggregate numbers, even though the debt will come out of this with the debt much higher than before, interest rates have fallen so much that it's actually just as sustainable, if not more sustainable. I'll tell you, Kelly, I worry less that the amount of debt is a problem. I worry more about just how wisely we're spending it. I mean, the idea that we need to keep sending people $600 checks, $2,000 checks, I'm not sure the sky seems to be the limit. This country has a lot of needs. We have energy needs. We have education and retraining needs. We have all the investments we need to make to adjust to this increasingly virtual economy that I wrote about. And I'm not sure that just sending out checks to people, 90% of whom still have jobs, is the wisest way to use what are, at the end of the day, still finite resources.
Shepard Smith here. Thanks for watching CNBC on YouTube.